Good morning, Jags. This is Fahad. Today is Wednesday, February 17th. Let's get started. Okay, so one stock this morning, Allison Transmission, symbol ALSN. This will be reporting earnings tonight after market close. And this is an earnings preview for this company before it reports. First of all, purely technically speaking, this stock is retesting the technical trending support that's in front of us. Multiple times it has come to this level and it has bounced back. The only concern on this chart would be that the recent bounce that happened after this sell-off in the middle of January, or late January rather, we did not see the stock go on to make a new 52-week high. So basically a bit of a stalling price action for the past 2 to 3 months. Nevertheless, it is still holding an important trend support. Also, there is major VOP support levels just below this, around $41 per share. So I think that the setup is there for a potential bounce back from this level and a return to new 52-week high. And if you go to long-term weekly scale, you will see there's a lot of overhead resistance coming up around 47. The stock closed yesterday at 42. So if there's a bounce back coming, I think it goes to 47 first. It's going to have to push through all of that on high volume to clear through all of this congestion before it makes a multi-year high. So that's my technical view. In terms of option activity, we have not seen a lot of accumulation here. However, it's worth pointing out that if you look out to May and the month of August, there's a little bit of bullish positioning that is in May 40, 45, and 50 strike calls, as well as further further out of money in August, 55, 60, and 65 strike calls. Sorry about that. That was my son who just walked into my office. Okay, all right, so that's the technical view. And now on the fundamental side of things. First of all, if you look at today's first read, you're going to notice an important news, which was briefly discussed, and that's this. This company is now also getting into electric vehicle transmission business. They announced a partnership with American Rheinmetall Vehicles to produce the proposal systems for Lynx OMFV offering. This is an important one because this company, this particular business, which is the Rheinmetall Vehicles, is trying to get a large order from the U.S. Army's optionally manned fighting vehicles program. And if they are able to get it, this program could potentially modernize the U.S. Army and will replace nearly 3,800 Bradley infantry fighting vehicles. The program will start in earnest and will likely continue for several years, potentially next 5 years program. So this is a very large order if the company is able to get it, and naturally with this partnership in place, this will be increasingly positive for Allison Transmission. Since this news came out just yesterday after market close, this is not in consensus view at all for anybody, but so watch out that this catalyst could actually play out. But aside from that, given the earnings are tonight after market close, I wanted to take a look at a few channel checks to see if we have improving trends that's in front of us, and we certainly do. On Tuesday, yesterday, February 16, ACT released this January data, and it is quite positive for the entire Class 8 trucking market. The inventory has continued to decline double-digit percentage, which is always positive because it's telling you that the industry is getting back to an important shape, a very healthy shape, while the bills have reversed last month's positive inflection. On a SARS basis, the total build was 289,000, which was slightly above the prior month's build of 276,000, and is slightly above the replacement run rate right now of 250,000. If you look at the cancellation rate for Class 8 trucks, that has decreased month over month sequentially, now at only 2.4% in January versus a huge 7.1% in December. This is very strong. The declining cancellation rate for new truck orders is simply an indication, especially when combined with declining inventory levels, that the industry is once again getting back to a healthy environment. If we look at the revenue backlog for the entire industry, the backlog was up 13% sequentially, month over month, reaching 201,000. And the revenue backlog has climbed over the last 6 months from just 90,000. So the backlog has essentially doubled, more than doubled, in just 6 months from the pandemic low. And it is now reaching a level where the inventory and the backlog are going to start to get into sync, where better pricing action could emerge for all truckers. Also, if you look at production versus retail, the retail sales in the month of January was 21,100 units of Class A trucks, which was up 11% year over year. This was negative reading until 2 months ago. So now the retail sales through dealerships is also inflecting positive. And the last thing I will say is that in terms of total new orders, and I've also always said this before, that whenever you have a view on the industry or a particular stock, when the bookings are running well ahead of the revenue growth on hand currently, that's a view on the future. Bookings and excess of billing. Well, if you look at the Class 8 straight truck orders, they increased by 73% year over year in the month of January, which was a sharp jump from 8% decline in December and a 15% decline in November. So significant improvement from the last couple of months into the month of January, at a time when the inventory is falling and the retail sales are up about 11%. So the disconnect between the 73% order growth and 11% retail sales growth is telling you this gap will likely result for several more months to come, better and better, and improvement in the revenue metrics for the entire industry. Also, further breaking it down into the medium duty truck market, we always look at Class 8, but if we look at Class 7 or Class 7 buses or Class 5 to 7 RVs, all of them were up significantly in the month of January. The Class 6 and 7 was up 105%. The RVs were up 45%, which, by the way, also bodes well for THO, Thor Industries, which also hasn't reported earnings yet, and also for WGO or Winnebago. But we can cover those stocks in the future when the timing is right. But for now, my focus is ALSN Transmission. So that's it from me. The industry is showing strong sequential improvements in the month of January, and this company in the long term is beneficiary of this very important order that was signed, which is going to give it a next leg higher in revenue growth rate if this comes through, the big, large U.S. Army order for 3,800 Bradley infantry fighting vehicles. Let's go to Jay.
Morning, everyone. So today, taking a look at KRNT Digital. KRNT is the ticker. So this was a top pick from the Q1 Outlook.
Yep.
And the company reported their earnings after the close yesterday. Shares are up, looks to be 13% pre-market. And you shared the the press release in Telegram last night. Company beat on both the top and bottom line. Total revenue was up 49%. This morning, sell side is coming out. Craig Hallam upgrading the stock. Needham going to 125. Stifel going to 110. Goldman Sachs upgrading and going to 135. So a couple of those are now catching up. But anyway, looking at the earnings call, what did management have to say? So they said, while traditional retail is recovering from the effect of the pandemic, e-commerce and online marketplaces continue to boom across verticals, including core fashion brands, athleisure, sport licensing, customer apparel, and home decor. As a result, key and regional accounts are adding multiple Atlases, Vulcans, and AVHDs to their existing fleets, and we see multiple customers that started with entry-level systems from KRNT only 12 to 18 months ago, moving rapidly to purchase high-throughput systems. We also see a very healthy mix in our order book of net new versus existing accounts across geographies. They added that the Presto, One of their products is an absolutely game changer for the fashion industry, and the level of engagement with manufacturers for top fashion brands continue to grow. This isn't surprising because in the Q1 Outlook, we mentioned that the company closed on an important deal with a leading Italian digital fulfillment partner, one that had worked with some of the largest fashion brands in the world. So again, not surprising to see this. Also in Q4, they announced their new business line, leveraging the strategic foundation of Custom Gateway. Their cloud-based software workflow platform is unique, and they are experiencing huge interest from brands and fulfillers looking to adopt on-demand business models at a global scale, as well as automate and optimize the production flows. They received multiple orders from customers across regions, and that pipeline continues to grow. One item that caught my attention in the call was in terms of their customer breakdown. In Q3, we saw that 3 customers made up more than 10% of total revenue, one of them being Amazon, and the other 2 were international global brands, but we didn't know exactly who they were. In the Q4 call, we found out that now only 1 customer contributes more than 10% of total revenue. And if you looked at the Q&A session, if you looked at Needham's commentary, Amazon had actually dropped below that 10% threshold. But looking at the agreement that they put in place and one that we talked about in the Outlook, they set aside a specific amount of money for new products. So I wouldn't be surprised to see them jump back up to the over 10% threshold in the back half of the year. And the reason why I say this is because management talked about the 2021 outlook and how they're excited for these significant strategic initiatives. They added that we will launch powerful new products which will drive further penetration into the heart of the fashion, apparel, and home decor industry. We are going to launch a breakthrough proprietary automation technology that substantially increases throughput, usability, and consistency of operation. We will also be introducing a groundbreaking proprietary 3D textile application that will bring to the market unique embroidery, high-density printing, and vinyl heat transfer effects. This first of its kind application will enable entirely new product creation, disrupt the traditional embroidery market, and significantly expand KRNT's addressable market. And these products will contribute starting in Q3. And based on and depending on travel, how that kind of unfolds throughout the year, the company is planning to hold a business event in Israel sometime in the back half of 2021. But overall, just a solid quarter, and the stock is being rewarded today.
Yeah, absolutely, a fantastic quarter. And from everything that you just mentioned, Jay, it sounds like it's still not done going up, is it?
No, it's not done.
Yeah, we're gonna, of course, naturally, we're gonna see slight pullbacks and corrections and backings and fillings. I mean, the chart is right in front of you. For the past 9 months, it has been a very steady gainer for a long period of time. And any of those modest pullbacks of a few percentage points have only resulted in fresh new buying opportunities in the stock. And this trend will likely continue because this relationship with Amazon, which is a critical piece of the bull case that we presented in the Jaguar first quarter outlook, it's still materializing, has a long runaway ahead. And all these new announcements and launches that are expected in Q3, that's still to come. That's going to continue to move the forward earnings estimates higher for the company. So yeah, fantastic. And I think it still goes higher. Now, for those who do not know, first time listening to this, the stock closed yesterday at 97.50, something like that. It's going to open at 110. So the stock is up 13% in pre-market. And as a reminder to, once again, this is a top pick from Jaguar first quarter outlook. So now this has been a top pick in this quarter outlook, and it's going to this call spread that we recommended, May 85 115 call spread, with stock now trading at 110. This call spread is going to likely open higher from $10 to possibly $25, or so more than doubling essentially this morning. And a big beautiful bull case that was presented is right here in front of you. Lots and lots of things were discussed. This is the entire write-up from the Jaguar first quarter outlook. So there you have it. I'm already getting text messages and emails. In fact, just now as you were talking, Jay, what to do with this position. Some clients are asking me, should we take profit? Should we roll out? What to do? So I'll be responding to all of that in the chat room. Great stuff.
Sounds good.
All right, let's go to Chronicle.
Morning. So we received a question about HUYA, HUYA, over the long weekend. Haven't talked about this one for very long. Basically, they're asking whether or not to take profits in their common stock position after many months of the stock doing nothing. If we remember, this was a company we covered way back last year in episode 2 of Chinese Tech Demystified. We even traded call options at one point, which didn't work out, and we basically gave up on it. But then last week, the stock spiked almost 40% in 3 sessions, and the reason for that was mostly a combination of 2 things. First of all, there were some postings on the Wall Street Bets forum on Reddit that were basically talking about the high short interest without really adding anything new in terms of fundamental discussion. But apparently that was enough to get some of the retail crowd excited. That was the first driver. Second driver was some news that came out last Thursday in which both Morgan Stanley and Renaissance Technologies separately filed with the SEC that they acquired stakes in the company. Specifically, Renaissance acquired roughly 2.6 million shares, and Morgan Stanley amassed 20.4 million shares for a 26% stake in the company. And so Morgan Stanley is now one of the biggest shareholders, which is a very surprising move in a lot of respects. Now, there are currently several theories being thrown around regarding why Morgan Stanley acquired such a stake, but I'd rather not speculate without knowing all the inside facts. But to answer the question about whether or not to take profits, personally, I'm still very fundamentally bullish in the long term, especially with the continued growth in esports and the high quality advertising revenue that this platform generates. Southeast Asia remains another underpenetrated market for esports, growing at 24% CAGR over the next 5 years. So there's absolutely no reason to me why this stock should be trading so depressed versus Bilibili, which has more than tripled in the past year. Essentially, what's really been the headwind for HUYA is the lack of clarity surrounding the anticipated all-stock merger with Douyu, with the deal backed by Tencent. I think the deal is going to go through, but it's just a matter of when. And once it does go through, that's going to result in the runaway biggest online gaming and streaming platform in China. On top of all the improved margins and cash generation that's going to result from the synergy with Tencent's guidance. And this is already a profitable company, I would add. They're not reporting persistent net losses like a lot of other Chinese tech companies. So if you're holding common and you're now back in the positive after last week's rally, this is a difficult one to call because on one hand, I really like the long-term prospects regardless of Morgan Stanley's stake. However, if we look at the historical price action of this stock, you'll notice that every time the stock ran up, it just keeps getting sold back down time and time again, which is incredibly frustrating and was the main reason why Fahad and I pretty much gave up on it. Because for whatever reason, the market hates the stock because of this fixation on the upcoming merger. But that said, if I were long common right now, I wouldn't close the position out just yet. What I would do is implement a trailing stop, a hard trailing stop to protect some of the gains. But at the same time, let's give the position a chance to make us even more money because you've essentially been given a second life here with the trade having been a bust for several months. Like there's nothing to lose now. So I think there's no harm in using a trailing hard stop and giving it a chance because maybe, just maybe, this time will be different and the market's not going to sell the rally for once. Fundamentally, I think if and when this merger with Douyu is completed and out of the way, that's when most of the overhang will dissipate because our overall bottom-up thesis on the stock is still intact. So I would keep a hard stop.
All right, great stuff. Thanks for the update, Chronicle. So first of all, as you all know, this is the note on the left-hand side of your screen on August 8th, the bull case that was presented in the Chinese Tech Demystified. If one wants to go back and refresh, it's all available right on homepage, along with the entire research note and slide deck. As Chronicle said, I also exited this position after it just simply wasn't working, and now after a couple months after I sold it, it's now starting to rip hard. But I have a simple question, Chronicle. What are the chances that this run up in HUYA, similar to many of the Chinese stocks, is simply a function of strong inflows from the mainland into Hong Kong, which has given a new life to so many Asian emerging tech and resulted in massive rallies in many areas across the board? What is simply a function of better inflows rather than actually fundamental?
That could be the case, but the catalyst for last week was almost certainly the filing from Morgan Stanley.
Got it. All right. Okay. We're going to stop over here. Thank you, everybody, for joining. And that's it from us. We'll see you in the chat room shortly.